Good morning, everybody. I hope you're having a great Friday so far. Markets are just getting started here today, and we've already seen some nice activity happening so far on the U.S. dollar index. Just going to clean up this chart here a little bit for you guys so we can kind of get started fresh and get rolling here. I'm not going to be too long today. Dave, unfortunately, again, he can't make it. He is on holidays, so he would normally come in and be discussing the gold and S&P markets. Gold, obviously, running in direct relationship with the U.S. dollar. Actually, seeing a little bit of delay, in my opinion. We could see an opportunity here to get long on gold. As you can see, it's making a nice push up while the dollar index is making this nice drop right now. Now the dollar, I'm expecting to hit down into this small consolidation area here. See how price is chopping sideways in through here. I'm expecting price to more or less run down into here at the very least. However, I wouldn't want to sell it here. I'd like to see if it wants to come back up, retest these lows in here that it's creating, and then we can look at the potential for taking the opposite trades in forex and obviously that gold. Where are we here? Obviously this guy right here. So and I would expect them to run out these highs and potentially start running up into the lows of this previous consolidation area up into here. So I'd like to see if we can get some sort of a bounce in here, come back down, retest those levels, and then maybe we can get in there. I'm not going to discuss too much S&P. I'm not a huge S&P trader. If I see a good setup on there, I'll definitely have a look at it. Dave's your resident expert for S&P. He'll be back next week, obviously, after his days off. But for S&P, big topping pattern in here. And there's a lot of areas under current market price where they could run these levels. So right off the bat, I'm looking at this low over here as being a potential for price to run, stab down into, and who knows how low it's going to go from there. A lot of levels of liquidity on the market here where they could run down to, and my eye kind of, you see this big consolidation level right in here. That would kind of be the first level, these highs in here, where I think we could see price stretch down to if it really wanted to make a go. However, you do see this this price action here. We've had a nice bull run up to the point where we're at now, and it being Friday and everything else, we're probably going to see weaker price action. But I wouldn't be surprised if we did see something like this happen, price to come down into here, find some support into this area on S&P, and then we may see this come in. So I don't typically counter trend trade, so I wouldn't be recommending anything until price did in fact get down to here. And by that time, Dave will be back in, and he can recommend either a buy or a continuation on the downside signal for that. So we'll wait for that. So just real quick here, looking at the U.S. dollar, price could just could just give us this full price range right in here before retracing at all. Been a fairly big week so far on the U.S. dollar. Monday started trading out, dipped into a Tuesday low. We saw some nice expansion Tuesday, Wednesday, and into Thursday, and so far Friday is really trading softer. So if we do throw a quick fib up from the low of the week to the high of the week, you can see in here there is a high level of confluence rate here at this 79% retracement level. So we could see a measurable bounce back higher from there. So that's kind of what that's what I'm going to be watching for here right now. When price starts slamming into here, is it going to gain some support and start to move higher, and then potentially getting back above this level here, or are we going to see a continuing falter in price and this low starting to get ran right here? We'll have to wait and see. So far, price on the U.S. dollar, I mean, you can see the consolidation range we've been in. the market just ran up, took out these relatively equal highs that we have right here, ran the stops, grabbed the liquidity, and rejected instantly on Thursday. And so far the market is definitely trading weaker now. And I'm just going to zoom in a little bit here, and you can see this 79% tracement level right here. It's right around the middle of this daily range on Monday. So again, if that level gives out, then I'm not expecting these levels to hold, and I would be expecting for price to come and run under this guy here. May not do it today, but certainly into next week it will probably do that. Now, what I'd be looking for, and again, if you guys are coming in here today to get a trade, and get in the markets, there may not be a high probability setup for you today. I'm going to run through the euro and the pound to see if we can eke something out, and then I am looking at something on crude oil right now. There is a gap pattern on crude oil that could end up filling today, so I'm going to be looking for that, but I'll come back to this here in a minute. But looking at the US dollar, because of this rejection up here, I'm not thinking right now that we're going to see continued bullish action in the dollar right off the hop, especially not today. Obviously, we're trading a lot weaker, and then going into next week, we'll have to see what price wants to do. But if we continue to run down and we run this, I'm going to put up a price tag on this, just so you guys can kind of get an idea. I'd even venture to say 94.35 would be a pretty good level to, I just want to get a reading off of this 1 second, guys. Yeah, they're in about, I'm just eyeballing, but about that 94.35 to 94.30 level on the US dollar. If we lose that, then you can be rest assured that price will probably come down, and it will take out the low of the week from earlier this week here. And then from there, if we lose that low and we don't start to garner any strength down into this area, into the 93 big figure level, then we could see price continue to retreat. And then in that case, I'd be looking for these lows under here to be the first target. And we'll, discuss this further as, as price comes down to it, but obviously that's kind of where I'm looking. But I'll be honest with you, I think the US dollar, it is supposed to be experiencing bearishness in this time frame in the summer months here, so that could be what we're seeing. They may have ran up, grabbed the liquidity above, rejected, and are seeking lower prices for the next 6 weeks or so, for the rest of summer, 5 weeks or so, and then in September it could gather some strength and then continue higher. Certainly a possibility, but right now we're sort of at the top range of this consolidation, and I wouldn't be going along here, especially after today. I wouldn't be looking for any long ideas until price does bottom out, confirm it, and whether this 94.35 level holds up or not, we're going to find out here pretty quick, so stick around. You can see a big sell-off here. They are in a very big hurry to run price lower, and I think it's just because there was a lot of liquidity above the market right in here. Everybody in here is thinking, everybody in here, as price has been running up and running up in this consolidation, everyone's thinking this level up here, this 95 level, has been acting as resistance, and it's not going any higher, and then it comes up and everybody's been jamming their stops above here, and then the market finally trades lower, runs it nicely here on Thursday, and then just falls out of bed very quickly. So if we are going to see continued bullishness, which is very possible, there's a lot of things with what Trump's doing and garnishing support for the dollar, but it could be all for naught. It could be seeking lower prices here. Price has been going up nicely. Like, this is still this is a continuation of a big bullish pattern right here. This is actually looking like a bull flag right now, and so we could definitely see another drive higher on this market. I've been actually anticipating moves up into this neck of the woods here on dollar. This is a weekly chart, but moves up into the 98 level here, and we could certainly get that. But again, seasonally speaking, the U.S. dollar is faced with bearish activity typically at this time frame, and we may not get that. We could see some downward action on it here before it does. So you can see the reaction on Euro USD. Obviously, just a nice push. I was actually watching this price starting here about an hour ago, and I wish I didn't actually turn my markets on here until about 6:45 New York time, and that was basically price was just kind of starting to come up into here, and I was actually looking for one quick drop below to see if price wanted to take out these equal lows down here, and you can see it just basically tweezer bottomed and shot straight up. So price could be giving us an opportunity here now, and I might be inclined. Let me just get my demo account here. This is a demo account, just so you guys are aware, but I don't take trades in it. It's just for analysis purposes only. But if I see price come back down to this area here, I might be inclined to and retest these levels in here. I might be inclined to see if we can get continued movement above this high here for the day. Whoops. So that's kind of what I'd be looking for. A move up to here or a move up to here. So again, if we could get a drop back down a little bit lower, let's just say this candle high for argument's sake would be, with the spread, we could get a nice 40 pip to 60 pip movement, but we'll see. Price really extended itself out here, so we'll probably end up seeing a move up into those levels, but we may not see a decline down into here as deep as I'd like it to. Same thing on the pound dollar. Let me just put a level on this here. Looks like the pound dollar just about took out these highs here. When price starts to do this here and it comes in and starts banging up into here, that's not resistance, guys. That's just basically toying with people's emotions. Price will go above here today. And what I'd like to see, though, before it does, I'd like to see this, and I'd like to see them kind of consolidate this a little bit, and I'd love it if they were to drop down to about the, what's the high of this candle here? Oh, hang on one second. There we go. High of this candle comes in at 130.49. So if we could see price run back down to 130.50, even 130.55, I'd be looking to buy that, and then I'd be targeting up here. So I'll just run down to a 15-minute chart so you can see what that looks like a little bit better. So I'd be looking for a level to come back down here, retest this area, and then if we can get a move above here on the cable, that'd be 30, 35, 40 pips potentially. We could get about a 10 pip stop run on it, and maybe even higher, just depending on how much they want to jam this thing up here today. Definitely some, with that weakness in the US dollar, it's offering for bullish opportunities today. So we could see a level that runs up to at least here, which again would be about a 40 pip run on price today. So we'll see if we get that. We may not. Price just came down and retested this candle high here. So just bear in mind, we may not get a move lower, unfortunately. I really would have liked to see it come back down and recapitalize this area here, but just keep in mind that may not happen. So I'll be on this live session here for about the next half an hour. So I want to talk about a couple of levels that I've seen through the charts on this week, and some potential levels that to watch for next week. And for all of you that wanted to, for all of you that were in the markets yesterday, I apologize. I didn't get a chance to get into the front of the charts for 1 second yesterday. I had some family commitments, and I had to, those took precedence over everything else. So unfortunately, I didn't get a chance to get a live session in, so I apologize. But so far, this is I did Tuesday, Wednesday, and this is now Friday session. So I typically usually only do about 2 a week, and then Dave will come in and he'll do his 2 for the week. So I kind of been making up for Dave here this week, and so I'm a little burnt out on the charts. I'm not going to lie to you, but I want to cap off Friday here, discuss the weekly range, and see what may lie for next week here. Going forward, so we can get a jump on the gun here. And I'll be doing a recorded video as well too, so once Friday's price action closes here, I will be putting out a video, pre-recorded video for next week, and some levels to watch once today closes off. But I'll kind of discuss that a little bit here today on what I think may happen, and we can hopefully take advantage of it for next week. So anyway, with that being said, let's just have a look at this here real quick. So I discussed the US dollar. If we lose that area, so far it's acting, we could get a little support in here. If this price continues to build off of here, then we could see these levels retag back up in here. So just keep that in mind, which means we could see that return back down into here. But just depends on how bearish they want to be. I mean, they're really pushing price down. This was actually a little bit of a head and shoulders pattern in here. You can see prices moved, had an expansion swing up to here, capped off the high of the week here, put in another shoulder here, and since we've fallen off. And typically when this pattern happens, you usually will get price that will take out interim lows like this here, for instance, and potentially, I don't know if we'll get this low here yet, but potentially what we could see happen, if we don't see any support here, we could see it return back up to this level later on, and then fall off. So that's sort of what I'd be looking for. We're probably not going to get that move today. We may get a return up to here, but we definitely won't get this move today. That'll be more into next week. And then so next week, we could be looking at potentially positioning ourselves to capitalize on this movement here, which would be a nice strong movement to the downside. And again, as I was saying, my target would be right around here, right around the 93.80 level. To 93. Even this low under here may get grabbed. There's definitely some areas right in here that my eye kind of goes to, and that would kind of be the sub 93. I'd say even 93.60 could be a target. Just eyeballing that right now. I can refine that going into next week, obviously, but that could be a potential target to the downside if we see continued bearish action. Right in around there. So we'll watch for that for next week, but we'll discuss that obviously when the time comes. And again, so we don't trade the US dollar, obviously. We trade the cross pairs, the Euro USD, the pound dollar, US CAD, etc., which fell off nicely as well too. Hit a very, very big area of resistance in here. And this was my analysis from, I believe, Wednesday. When price was trading softer into here, I wanted to see price return up, and if you were part of my live sessions, you would have got on that. I had called 32.55 as a potential area for price to run back up into. It actually ran about 25 pips higher and rejected over 160 pips. So if you got on that move, congratulations, good for you. That's something I was watching from Wednesday's market analysis. This was I'm sorry. I'm on a 4-hour here. I'm on a weekly. This was the analysis from Tuesday. As you can see, Tuesday's trading spiking up, creating the low of the week. Going into Wednesday, and then Thursday ran into the highs. I was looking for price to trade up into that 55 area, 132.55 area, and like I say, we got a high of 132.89 on the week, and you can see the move lower from there. So price basically following rate to script as planned, as usual, fairly predictable. The US dollar, though, I wasn't predicting a move this deep on US dollar. I was definitely, and if you go back to my live session from Wednesday, which is on our YouTube channel, obviously I had basically laid out the week trading range, and for Friday to go to trade softer. I didn't anticipate price to trade this soft on Friday. I was actually looking at this more into next week, this move to happen, but you know, it is what it is. The price gives us what it wants to, and we have to work with it. So, so far we're starting to see a little bit of rejection, which is nice. So that's the euro, that's the pound, Canadian dollar. Canadian dollar, if you're a Canadian dollar trader, I would be looking for a same type of thing. I'll be watching this area in here, 31.60. If that area gives way and we do see that continue push higher on the US dollar, then I'll be looking for them to come back in and trade up to these lows right in here at 32.25. We could even see as high as 32.30, and then I expect some kind of rejection. So basically price to do this and then reject, and I'd like to see these two lows down here get swept. And I was calling this level eventually to get hit as well too. So if that level goes there, then that would be the next level that I'd be looking for price to get down to. So we'll watch that on Canadian dollar. In terms of news, though, there's not a whole lot today. There were some CPI numbers for the Canadian dollar, which is why you saw this sell-off here. But that's really about it. I'll show you the news events here right now, so you can have a look at that. Right, but pretty much all Canadian dollar today. CPI, core retail sales, common CPI, etc., etc., etc. So we saw a fairly good move on the US CAD because of that. You can see here, but this is just falling in relation to this. I mean, that's really all that it did there. So the Canadian futures contract obviously gaining a little bit of strength. Probably some economic news that came out that showed a little bit of positive news on the Canadian dollar side. So could be short-lived though. Long term, I'm actually kind of bullish on Canadian dollar. I think we could see price. You know what? Let me just clean this chart up. We could see price run back up into this level in here. 136. Let's put it to an even 136.40. So on the upside, that's where I'd be looking. And you can see this bull run on the Canadian dollar. Just straight up price momentum. The bulls have control of this market, and they're definitely making use of it. So just keep that in mind. We could see higher prices. Now, the highs that just came in about a month ago, 1, 2, 3, 4 weeks ago, just tagged off of these lows in here. So this week here, I'm not expecting price to get any higher than that. And if we do see bearishness on the US dollar, we could see this fall off a little bit. We could see price trade underneath those lows right there and maybe trade down a little bit, potentially bouncing off of this trend line right here. And then running higher. So that's sort of what I'd be looking for. But that could take a week or two to do that, 3 weeks, maybe the rest of the summer, before it starts to gather some support in here. And it's just a matter of how long it takes them to run it. There is a level down here that kind of interests me as well. There's some fairly thin price action down here underneath these lows that they could want to run. And you can look into here, and this is prime case here. You can see under here, price has come in and created an interim low here, and then created a higher low, another higher low, and just higher lows all the way up. They didn't run stops. They briefly ran stops right there, and just by 1 pip or 2 right into here. But I think all of these levels here are very, very suspect. They could easily come down and grab liquidity underneath there before just continuing and reversing and going straight higher. So just keep that in mind. With the Canadian dollar, that's what we could see, and that's what I'd be anticipating going into next week, further decline. So we'll watch for that. Now, crude oil. So I just wanted to jump onto here real quick. I just want to look at Aussie. I was actually expecting a move higher into here on Australian dollar. It kind of gave that to us. Let me put the data dividers on. It kind of gave that on into Thursday. I was looking for a move higher than this high right here. We didn't quite get it. It just failed by a pip or two into that region there, and then I was looking for a sell-off. It did give us that sell-off, that anticipated sell-off right into here, and that's sort of what I was looking for, the 73, 75 level to get tagged, and it actually went a lot deeper. It went about another 20, 50 pips deeper into Thursday, and then created a swing low here, and rejected, and now we're going to see higher prices. So we could see this, if we do see that sell-off in the US dollar, we could finally see prices run up into here. And I'm looking for 74.60 on the high end to get hit. Right into about there. And again, may not hit it today, but I'd definitely be looking for that level to get tagged on into Monday, Tuesday of next week. At the very least. So we'll watch for that if you're an Australian dollar trader. Back to oil quickly. So just a real simple trade here on crude oil. And keep in mind, folks, it was contract rollover. So we're in a new contract month on crude oil. It was contract rollover yesterday, so that's why you're seeing this gap here in price. We are now into the September contract of crude oil. So my demo account, I just have to update that. If you give me 30 seconds here. This is just the cash price on this. This isn't the futures price on this or anything like that in this demo account. It's just a continuous cash price that you're looking at. So that's why you see the gap in here. If you give me 1 second, I'm just going to run over my other demo account. I want to pull up the new contract for crude oil. If I can find it. One second here, guys. I just have to. Sometimes they don't always. You gotta go in and you gotta click show all, and then you gotta go through it. There it is. Okay. So you can see here, current crude oil pricing. Right in here you can see that there is no gap that exists in this, whereas this cash price, you can see that gap right there. So the gap starts at 69, call it 69.20, I guess, for round number sake. And then it opened up today lower. And so if we switch back over to the actual commodity price, or put on my data dividers, we have a higher price. So we don't have a confluence between those two. You can see here. You can see the difference in price. Price ran up to I just got to make sure I'm on the right price list there. Price ran on this guy here. It ran to a high yesterday of 70.13, Let's get that on there. See that level in there, and then on this chart here today, you can see the price ran yesterday to a high of 68.76. So a little bit of discrepancy in the current valuations between these two brokers. So very important, guys, that that's not going to do it. I'll just have to do this. Very important that you guys check prices. So right now with crude oil, we are just going into a new contract month. So you definitely want to be aware of that. Every third Thursday of the month, don't trade commodities, because it's contract rollover. It's going into several contracts flip over and go into the new months, and you definitely do not want to be going into contract rollover. So you want to make sure that you liquidate your positions pre-contract rollover, and do not ride that that train until after. A day or two after. Usually the following Monday is sort of when price normalizes and comes back to snaps back into what it should be. Because you can see here, so you can see it's here. Let me see if I can do this here. Let's put these side by side a little bit better. Sorry guys, I just want to make sure that you understand this here before I move forward. Okay, and I'll just scrunch the charts up here a little bit. Okay, so you see this. So this was the July 10th trading. July 10th trading. Market created a high, and then you see the sell-off. Right, both brokers are accurately portraying price the way it should be. And then we come down here, and price has been consolidating this week, and then this is typical price action on these contract rollover weeks, so about the third week of every month, especially with crude oil, because the contracts change every single month. If you get things like I don't know, like copper or something like that, you don't have new contract months every single month. They typically run out 2 to 3 months at a time, so you don't. It's not every single month that this happens with every single commodity. But things like, you know, nat gas and crude oil and wheat and, you know, things like that. Well, not necessarily wheat, but you have contract rollovers every single month from month to month. So you got to be very, very aware of that, because you can see the difference in price here. So we consolidated, price ran up into Thursday's trading, dropped down, expanded higher, and then this has the price staying in at 68.39, whereas this gap down. And you can see that gap doesn't exist on these two charts, where the high came in here at 70.12 and the high came in here at 68.90 thereabouts. So you can kind of see the differences. So anyway, if we go over to the cash price here, I would basically just be looking for price to catch up, and actually you can see here it took out the short-term high from here. Whereas price did not, that didn't happen on this chart here. So ultimately with crude oil, so I'm just gonna give you just sort of a longer term sort of picture. You can see this excuse me, this price swing in here, where price ran up, created a high, and came back down and traded softer. I've discussed at length several reasons for these pushes higher in crude oil, and you can see the bullish activity that's been, you know, occurring in this market. I wouldn't be surprised for a little bit of sell-off, to be honest with you, in this market. Now, more than likely what we're going to see is we'll probably see them push higher. I'd have to get them, or I'd have to want to see these levels in here broken and ran to the upside, and I want to see this level right here get ran out. And once that happens, so once price does this and starts running up into here, this area right here, I'm going to change the color on this just so, whoops, just so we can, oh, Jesus, come on. There we go. And just so you can kind of get a better look at what I'm talking about. But this consolidation area right in here, I'd be looking for price to run up into that, and I'd be looking for really not too much higher than about this 71.44 to 71.50 level. Let's just leave it at 71.50. I would be expecting some sort of resistance at that level, and this is just relatively short time. There's a lot of pressure being put onto crude oil right now. You know, I talked a little bit about Iran and the sanctions that the U.S. had put on it. Well, I just was reading an article earlier this week that apparently China, just to basically stick it to the U.S., is going to go and buy and really start to buy up a lot of Iranian crude oil, which means they're going to start pushing more onto the market, and basically they're going to say, to hell with you, the U.S. can't tell us how to sell our oil and who we can sell it to. And so, long story short, with Russia increasing output, OPEC increasing output, Iran potentially going behind, you know, the back of the U.S. and saying, no, we're going to sell directly to China, and China basically wanting to make a point to not do anything with the U.S. You know, they're going to buy Iranian oil, I think, and especially Russian oil as well too, and I believe it could weaken prices of crude oil going forward for the at least for the short term. Long term, I'm bullish on crude oil. I think we'll see prices run back up into the 80s, and I've discussed that several times, but I want to see what happens here into next week. I want to see if price has a willingness to get up to the 71.50 level, and then from there I would be looking for a level of resistance, and we could potentially see this happen. So the market structure going forward, and I'll just maybe expand this a little bit for you guys, but the market structure going forward would kind of look like this, and potentially this old low created from June 14th could get tagged out and ran, and basically this trend line here would get blown out, and we could even see something like this happen after that. So I'll leave this up on the chart here, because this is, again, this is just my my demo account that I take demo trades in for illustration purposes. This isn't my main main account that I use to analyze price, but this could be something that we could see as a market structure to unfold, and they could come down, and there is, just so you know, there's liquidity all the way down here. They haven't come down to scoop up any liquidity in any reasonable form for quite some time, so there are a lot of areas in here where they could want to drop price down to. So I'm going to keep watch on that moving forward. Short-term bearish, long-term bullish on crude basically would be my stance, but that all hinges on a couple of things. One, price has got to get through the current level. So this 68, you could call it 68.90, I guess. I just like to use even numbers on these. 68.90. So right about there to this. I kind of like that level right there, actually. 69.30. So this small level of price in here would need to get traded into and broken to the upside. If it doesn't, then we're not going to hit that 71.50, obviously. But this area right in here needs to get broken through. If we see areas start pushing, if we see price start to push through this area right here, then my eye is going to go to the 71.50. There's a little bit of area right in here where I think it could be a draw onto price. You see how very nicely price has been traded in these areas here. We see up bullish candles, bearish candles, and all the way up into these areas here. And you see price drop sharply down, and then they come back up and recapitalize those levels, and then they did it again here. They sort of came back up to these levels. I'm looking for a return back up to this small consolidation level right here and price tagging off of these lows. They tried to do it right here and failed, and then came down into the interim swing low. And I think we could see a quick push back up. Again, price has got to break through here. If it breaks through here, then I'll know they're probably going to be gunning for this level here. And then I'll watch for levels to act as resistance up in here, and then we could see price fall off. Now, if price starts to trade through this area here, this is it. If price trades through 71.50 and up into 72, we'll just leave it at that for now. But if price trades up into 72, then you can negate this trade idea, and we will see continued bullishness. Now, just keep in mind, crude oil, they manipulate the hell out of this out of any commodities. This price is so manipulated, and so anything's possible. You know, with so much stuff going on around the world with this commodity, that I mean, anything is possible. Someone could have an agenda and they say, I don't care what anybody else is doing. I don't care if they're producing 1 billion barrels of oil a day. We want higher prices on crude oil. We want to get this up to $80. Well, then, technically speaking, on the chart, none of these levels will make any difference, because they're just going to jam this thing up higher and higher and higher and higher. So there is that sort of X factor with crude oil. So just keep that in mind. But anyway, I just wanted to verify price on this one here. I was thinking about potentially getting in on this move higher. However, that's quite a discrepancy between the cash price and the actual futures price on this, so I don't think I'm going to be looking at anything. Although we did make a nice move to the downside here. If price comes in actually into here, into this range here, then if we see a quick move down, then we could potentially pick up a long and see if it wants to recapitalize these areas in here. It's getting late though into Friday. I shouldn't say it's getting late. It's fairly early still into Friday. But you know, there is room for movement, of course. But I'd be a little bit hesitant today to be putting anything out on crude if I were you. If you do, do demo only, of course. I definitely wouldn't be trading live funds. Not today, not on crude, but I'd be potentially looking for something like this to happen. And then next week, I'd want to see them come up and fail at these levels up in here, and then away we go to the races from there. So that's my ideas on crude oil, guys. As for the rest of the commodities, like I was saying here, yeah, we saw a real big push up into, this is gold. We saw a big push higher above these highs into here, pretty much right off the bat. Price didn't allow it to come down at all and to recapitalize into a decent area where you could get long. So I would nix that idea on gold for now, guys. I mean, we'll probably see price push higher up into here, but I don't like buying on up candles. Obviously, you know my sentiment on that and the reasons why. I'm not going to get into that again here today. So if we do see this candle push lower, now my only thoughts are on this. It took the highs out already, so I would watch this area very, very closely. If it does trade back down, if price does want to come back down, come on. Okay, you've had your chance. So one thing about MT4 is it's a great platform to trade off of, but sometimes it is very, very finicky. So if price does trade back down to this level down here, I would be looking at these levels in here to see if it's going to act as any type of support, and then you could potentially get long for the rest of the day. I would close your trade before or on about a little before 12 o'clock New York time. If we do see it trade back down to here, but I wouldn't want to be getting long at current location, because that could be a stop run where they're just running price up just to grab the liquidity, and then they could just sink the market. So just keep that in mind. US dollars so far hanging out at that 79% retracement level that I was looking at. Same thing euro, same thing cable. Cable finally did that stop run as I was mentioning here. Looks like it did about a 20 pip actually. 16, 17, 18, 19, 20. Yeah. About a 20 pip stop run. A little more. A little more. The body of the candle anyway so far is at 20. But just a nice bear run this week, so there's definitely a lot of areas above price where we could trade up to. I really like this area in here. You see these lows? See this consolidation area right in here? We'll drag that out. Where price really gathered up positions, false move higher, and then they dropped the floor out of the market and ran price down. Long-term speaking, you can see I was calling these lows here for a very, very long time, and price finally got them here this week onto Thursday. You can see the reaction happening, just a complete rejection of those levels. I think we're going to trade higher. You know, and again, same type of idea, mirror opposite of what I was talking about. My thoughts on the U.S. dollar. U.S. dollar is running up. We just took out Wednesday's high here into Thursday. And so far, Friday's price has really been selling off. To me, my mind, this is a bullish price. Sorry, a bearish price pattern that's forming here. And I would expect something like this to happen. So if that's what we're going to be looking for, it'd be the same thing on pound dollar. So price ran these lows here. Same thing that the U.S. dollar did. U.S. dollar ran these old highs in here, up here, you see that, and then we're seeing rejection happen, and I think we could see prices returning back up to here. What I'd like to see actually going into next week is, I'll just zoom in here a little bit. Nice bull candle right here. I'd like to see this high from Wednesday get taken out, and then basically I'd hope it would kind of stop right around in this area right here. But I'd like to see if we do see bullishness on next week, price action. I'd like to see price return back down to the old candle high of, I got it right here, 130, about 130.80. That would be a great level. But if price came back down, traded off that 130.80 level, then I'd be looking for support at that level. And then I'd be looking for 132, 133s to happen. So that's kind of what I'll be looking to next week, just to kind of give you a little forecasting. But see what else we're looking here. If you guys have any questions, if you guys have any charts you want me to have a look at that I haven't, I mean, so far I've only just been covering a couple of the majors. You know, U.S. CAD. I haven't done yen or anything for a while. I don't trade yen. But if you have something in particular that you want me to look at, throw it in the chat, and we can I can run through it here real quick for you guys. Really like price returning back down to this 111.40 level on yen. I think it'll easily hit that today. And then from there, we're going to have to see what it wants to do. If we see that continued bearish action on US dollar, we could get a break of these levels in here. Really like this level in here, actually. We'll definitely trade down to that today, in my opinion. This level should get, these old highs in here should get retested. Another level right here where they could see a bounce. Not 111.60, but I kind of like that 111.40 level on yen if you guys are a yen trader. Be careful for this though. I may want to bring it up a little bit higher and then trade softer. Or that could have been it right there, but just going to run through price here quick to see if I see anything else that pops out at me. Left two equal highs up here, so just keep in mind they will bring price back up there, but they are really running it deep right now. And seasonally speaking, copper is hitting a period where it does start to turn around and go bullish here in the next, I think, week or two. If my memory serves me right, I'll have to double check that. So we could see price basing out here. So I want to see kind of if this is going to offer the low in here. You know what, actually, let me just bring up a better chart. So again, this is the cash price for copper. I want to bring up a futures chart. And I'm just going to go to barchart.com. Free resource you can use. And it gives you a great idea as to exactly what the futures markets are doing. Metals. Where are metals? Metals. There we go. I can't read today. Okay. High grade copper. Let's pull this over so you can see what I'm doing. September contract. Copper. There we go. 27. 73.50. 73. Going out into October. So copper is one of those ones that rolls over, right? You can see July, August, September, October, November, December. Copper is another one where they have these contract rollovers every single month. So just beware when you're trading copper. The third Thursday of every month, contract rollover. They go from September to October. So right now we are coming up to the end of July. At the start of July, we trade August, and then going, obviously, the rollover, now we're trading into September. So come the third week in August, look for that Thursday. We'll start trading from September, and we'll roll over into October's contract. So just keep that in mind. I'm just kind of looking at prices here on the contracts that are being offered. So nothing yet to indicate any type of bullish price action yet. I want to go on, bring up a quick chart of copper. And if there are any copper traders out there, copper can definitely offer some great moves if you can get into them. And it's very, very explosive movements can be had by all on this. Look at this. Look at the COT on this. They are really buying into this. So as price is dropping, you can see into here. So this is a year chart for copper. Some thin price action in here. That was a draw. They exploded and expanded price all the way up out of here and just took the high. So on this chart here, you can see the difference. There's the high. They just failed to get that high in there. So there's still liquidity sitting above this area. And for everyone going short, so all the market makers, all the big banks and everyone like that, they rode this all the way up. Basically, consolidated price, gathering up orders, did one final push higher, took out these short-term highs in here, and then they sold into it. And you can see here, look right down here, they're coming in and they're selling. So this big push up into here, they're selling into that. So that would be a good indication of a sell program. And you can see exactly what happened here. The market fell right out of bed. This area of inefficiency was cleaned up. And I'll see if I can get out a little bit further on this. You can see now we're coming into here. Okay, so now here's the thing. So this is long term, obviously. They're coming up into their buying price up right here. They're jamming price right back down to another consolidation level down in here. And I'm interested to see if these levels are going to hold up. So this pretty much 2.63, 264 even, I would say, in my mind. They've rejected so far of 267. But if they want to keep coming down, I'd be looking for somewhere in the middle of this range in here to offer some sort of support. If it doesn't, then these lows down here are going to get tagged, and then we'll be running right back into 231. So just keep that in mind on copper. But you can see here on the yearly, that's a 5-year chart, obviously, but you can see they're in a very, very heavy buy program right now, and we could be seeing price start to turn around. So I like higher prices on copper. Here's the thing, you know, there are trade wars and everything going on right now, but there's a lot of reasons why copper is in demand. Definitely traded softer, but I can go through this in another video here for argument's sake, or for time purposes. I've been at this for about an hour now. I don't want to get into this too much detail right now, but we could be seeing higher prices, and you can see the big commercial traders. They're buying this right now. They're right. They're not selling into this. They're buying this right now, buying it all up. So if we do see price start to move, we could see this going into next month, where this sort of would be the failure swing. They'd fail to go lower than this low here, and we could start to see something like this happen, where we'll see price expand out of this area, come back down, retest it, and then that's where we'd get long. We'd look for the failure swing, and then we'd look to get long off of that. So that's kind of what interests me. I've talked about this before, but I also talked about it in these areas in here. I was looking for them to do a quick stop run under these two equal lows right here. Sorry, these two equal lows here. When price does this and it slams through and it closes through these areas here, that's kind of the telltale sign that they're going to continue to drop the price. And you can see that's exactly what they did. They just retested these old lows here, and then they sunk price. Same thing here. They got down to this one here. What did they do? They came and stopped. They actually faked, I'm sure, a lot of traders out. I didn't put any trade out on this because I want to see this price action happening. They expand higher, come back down, retest, fail, and then run. That's where you get long. And they didn't do that here. They came down, they came back up, and then immediately rejected the same day, and then sunk price lower. And that's your telltale sign where they're not coming up any higher. Came back down, tested it one more time, and then sunk it lower. Now here, this would be an example of, okay, they came in. I'll just move the chart over a little bit here. Right here. So then you come under the next sort of relatively equal lows, which is this level right here. See these relatively equal lows right there? So I'll just maybe drag that out so you can see that a little bit better. See, they come in here and they expand lower, they take out those lows, and you think, okay, well, this wick right here could be the new low that's formed, and this could be the bottom of the market. So let's see what they do. So they run price up. It does this leg here, as I say, and then it immediately fails. It doesn't continue. It comes back down and retests this, but then the next day, look at this, the next day, bam, smashed people out. So anybody trying to get in on this pattern without confirmation, they just got hurt and taken to the cleaners right there. Boom. Expanded it lower, chopped it sideways, expanded lower one more time into Thursday, and so far Friday, we're rejecting. But I'm not going to get long on this pair until we see this level come back down here and it's retested, confirmed, and then we see a breakout. So, but so far with this commercial activity right now on the COT, and I'd have to look at a couple things on copper. I do like it, and I believe we are coming into an area of bullishness on copper in terms of seasonality. Give me 1 second. Let me just bring up. Let's just see where we're at on that real quick here. This is another free resource that you can get online. Metals, copper. I know I've looked at this before and brought this up. Yeah, you can see here into July and into August, we are seeing bullish price action. right into here. And this is that September contract I was telling you about. We're trading currently in the September contract. And you can see here, we do see some moderate bullish activity on copper. So if they are buying into that rally, as suggested, then we could see higher prices on it. So anyway, I hope I didn't lose all you guys with that. That's just something I'm looking at on the radar screen. I do trade a lot of commodities, and I definitely like to keep you abreast of any of the moves potentially coming up, because if you aren't a commodity trader, but you see these markets and you want to take advantage of them, there is huge opportunities in these markets. And again, I am not a licensed commodity trader, so do not take any of my advice as end-all be-all trading advice. Everything I do is in a demo account. Do not trade live funds in front of you guys with any of this stuff that I'm doing. These are all just theories, and you take these theories, you know, as you'd like. I don't want to know if you're profitable. I don't know if you're not. So that's all up to you. But Nat Gas, sorry, that was just a little legal disclaimer that I have to go through. Nat Gas saw a nice bounce at this area in here. So I was looking at a couple areas. I was looking at this low to get run, and then I was looking to see what price was going to do when it came back in and slammed into these highs here. And then the last area was this one right here at 270. Well, it's a little bit higher, 272 basically. You can see price just kind of ran in and stabbed into that 270 level and rejected nicely. Nat Gas should be seeing a time frame of some bullish activity here going forward. So so far I like that. I like how it failed in there, and so far is showing some bullish activities. So I'm going to be watching this one into next week for sure, and we'll see if there's an opportunity. I'm going to go down to an hour chart here. Now you see this here, you see this expansion off this. They came down, dropped price, and just completely rejected, expanded straight up, and now we're consolidating. So into next week, here's what I'm going to be looking for all of you guys that want to take advantage of a potential bull market. Price rips up. Well, I don't know where it's going to finish today. It could finish lower, could finish higher, it could finish right here at this red line. I don't know. But next week, what I'm going to be looking for is for Monday to open up and trade softer, and potentially trade softer into Tuesday, come down here, and I don't want to see price go any lower than about this level here. So that would be the line in the sand. If price goes lower than 272, the idea is not valid. But if price comes down, it tags anywhere in 272 to 273. If price wants to come back down in there, and it looks like it's gathering up some support, it starts to consolidate, or just stabs down in and does something like this, where it just wicks into it and then it doesn't want to go lower, that's your cue. That's it. That's where you would want to get long. And then I'll be looking for, obviously, them to come in and run these highs in here, and I mean, on and on and up. And there's a big topping pattern up here that I think they're going to try and retest again. So I'm going to be watching for that. But if we lose that 272 level, that's why you don't want to just go put in an order in here and just leave it a limit order or anything like that. You want to watch price. I mean, you certainly could put a limit order in, but I would suggest that you want to put your stop. If price wants to start challenging the 270 level, that's, you know, don't let it run all the way back. Don't let it run any lower than that, because it's going to go much lower from there. So you could probably keep your stop fairly tight in there. But I'll be watching that into next week. If you're a member of F45trading.com, you will get that signal as it happens, when it happens, and confirmation, specific stop losses, targets on the upside, etc., etc. You'll get all of that. So that's what you can watch for. But anyway, that's about it. I mean, I was hoping to get a bit of a retracement today on some of these levels. I'm not getting a very deep one, to be honest with you. Price really hit an area where I'm not necessarily looking for continued bullishness going into today. It could certainly come up and run these highs here, but technically speaking, it's hit an area where I'd be, price range is complete for me, to be honest with you. If they did want to drop, this is the euro, for instance, if they did want to drop, that's not what I wanted. If they did want to drop back down into here and kind of think about things for a second, I might be inclined to take a long, but it's Friday, guys. Price has really, look at the weekly range. Price has really moved this week, from the high down to the low. This is the Euro USD, moved 170 pips. Pretty good range on the euro. The pound dollar. This was the trade of the week. This was the one that really moved. And you can see why. There was a ton of news, and if I show you this, you can see why. You can see all of this pound sterling news on Tuesday, on Wednesday, on Thursday. So they really moved, and some major monetary news, right? Average earnings, Bank of England governor was speaking, CPI news, etc., etc., etc. So a lot of momentum on the pound, and that's why we saw a move from Monday's high down to Thursday's low of over 330 pips for the week. So big haul. I'll be honest with you, I didn't get in on this entire move. I was watching price. I did a live session on Tuesday, and I was watching price right here at 132.55, and I didn't get a sell order in. I wasn't sure if we were going to run this high in here, and price just sold off. And I'll be honest with you, I closed down the charts. This happened at about, I think, 4 o'clock in the morning, and I just didn't have any mental capacity to sit up and watch it. I was tired, and so I went to bed. And what I should have done in hindsight, which is 2020, obviously, is just put a stop order in. I could have put a limit order in, or sorry, a market order in at 132.55, and then put a stop in about 132.85, and then that way, it would have prevented things from escalating any higher than that. Would have been a 30 pip stop loss if it got it. It didn't obviously run up to it. It ran literally 13 pips past this level here and then rejected. So a little bit of regret on my side, but I definitely didn't lose any money this week, so that's the good thing. But that would have been a nice move, and we could have captured all of this on the way down. But if you did get in part of that, congratulations. I hope you did. I talked about it. I gave you the concept, gave you the idea. I personally didn't take any trade on it this week, so I hope you did, though, and I hope you made some money this week. I hope you had a great week of trading. Yeah, I know some of you guys are S&P traders and everything, and you're just gagging for S&P stuff, but unfortunately, today is not a day where it looks very conducive, actually. If price doesn't break this 2804 level, it might be an area where you could go short. If it doesn't get any higher than that, if it comes up right here and that's the high and starts slamming lower, you could take a quick scalp on that, guys. Put your stop at 2807, basically. I would put it at. I don't want to see price go any higher than that. See what it kind of does in here, go short, and then I would target, I don't know how low it would get. I'd definitely target maybe these lows here for sure, and then maybe this low, so it'd be a couple of pips there for you, potentially. Wait, I wouldn't just jump into it right now, obviously, but you could see what price does in here. If it doesn't have any willingness to get above these highs here, if it does, then, cancel that idea. But the price has definitely been trading softer. Monday's open. Candle right there. We're basically retesting Monday's open right now. So if we don't get a run higher, you see this candle right here? If price doesn't close higher than that, which is basically exactly where I told you, then that could be a good short idea for the rest of the day and just riding out a short position on S&P. You can see Tuesday ran up, Wednesday consolidated, Thursday dropped, Friday we're dropping. So we'll see where they want to end up price on the week. But yeah, that's the S&P. So that's about all I got for you guys. I don't. It wasn't too exciting other than the cable trade earlier in the week. Today really seeing some. Look at the Aussie. Like, this is the weekly range: Monday, Tuesday, Wednesday, Thursday, Friday. Right. So again, Monday opened up right here. That was Monday's opening candle. So far, we're retesting that open again. So really, this entire week is a doji. So price is literally looking like this. Oops, sorry. So if you turned a weekly candle, right, that's your weekly range right there, and it looks kind of something like this. And then you've got your wicks right here. Boom, wick, wick. I don't really know where I was going with this example, but just kind of give you an idea. That's kind of what your weekly candle should look like right there. So if I go over to the weekly, right, that's what you're seeing right there. So price, what I'm driving at here is price basically is finishing off at what it started on the week. So it hit a pretty big range this week on the Australian dollar and really didn't make it anywhere momentum wise. So kind of interesting. Could be a bit of a shift that we're seeing. I don't know. Canadian dollar really dropping. US dollar really dropping. So that's kind of why I'm saying we've had a nice bear run, especially on the cable. Nice bear run on the cable, all the way down. Took out some lows. I wouldn't be surprised if we started to see some bullish activity on this, to be honest with you. But we'll see how that goes next week. Price has got to make it all the way up and past this 32.55 level, in my mind, in order to kind of go short-term bullish on it. So. Any questions, guys? I'm going to wrap this session up. It's 10 a.m. New York time. The market is doing what it's doing. I don't see any trades that I would feel comfortable in taking today. Unfortunately, could be some real good setups for next week. So definitely, you want to come back, check us out next week. And I'll put out a weekly forecast video on Sunday after price closes today. I might even do it later today. We'll see what happens. But I'll go through the news events with you for next week. See what's coming up on the radar screen. We'll check out some levels after Friday closes today. I'll post that. It'll be about a 20-25 minute video. Maybe not that long. We'll see. And we'll see about next week. But yeah, today it's just not looking like anything that I want to do. And again, it's 10 o'clock New York time. It's been a long week. Yeah, it has. It's summer as well, too, guys. That's the big thing. It's summer. So just keep that in mind. When you're trading Forex, when you're trading stocks, when you're trading commodities, keep in mind it's the summer months. And, a lot of big money, they're not around. They're not sitting in the office. There's definitely market manipulation and there's algorithms trading and, prices moving, of course. But a lot of big funds, big money, guys who trade markets for a living and kill it and make a ton doing. They're not sitting in front of their charts, right? They're on the lake. They're relaxing with their families. They're taking a couple of weeks off. So it's summer trading, and I wouldn't expect a lot of a lot of opportunities every single day, day in and day out, right? Just kind of keep that in mind. So definitely price patterns and fluidity of market and continuity picks up, come September after Labor Day weekend when everyone starts to getting back to work again. But right now, just keep in mind, like, it's the middle of July, right? We're smack dab right in the middle of summer here. So just take that into your account when you're trading, and keep your trades light, keep your risk low, and just take it easy, guys. Enjoy your summer, and just kind of get familiarized with the markets, figure out where we could potentially be heading for the end of the year, and capitalize on that. But don't over trade or over stress things here at this point in time, because it's definitely not worth it. So anyway, with that being said, I hope you guys have a fabulous weekend. Enjoy your time off. Take some time to study the markets a little bit. Watch for that video I'll throw out your way. Give you some insight into where I think things are going to head for next week. If you got any questions, throw them in the chat. I'll give you about the next 30 seconds to do that. Other than that, if I don't see anything, I hope you guys have a great weekend. We'll catch up to you next week. Dave will be back. He'll be doing his Wednesday, Friday S&P and gold sessions again with you guys. Speaking of gold, I was looking at this, and he'll get back at you. I believe he's back, so he'll be eager, I'm sure, to get back in front of the charts with you guys. So he'll be next Wednesday and Friday. Myself, I'll be back again next Tuesday and Thursday. Tuesday, London Open as always, and then Thursday, just depending on the what the market's doing, I'll either do a London or a New York Open on Thursday. So I'll keep you apprised when I know, and we'll go from there. So I don't see any questions popping up in the box, so I'm assuming you guys are good for the day. Thank you again for joining us, and I hope you have a great weekend. Take it easy, relax, enjoy your family, and we'll hit it again next week. So looking forward to it, guys. Thanks. Take care. Bye-bye.